Hello, this is Rob again, and we're going to be going over some trading goals. And I want to just do this really quick video. It's going to be about 5 to 10 minutes. I want to make sure that you are on the right mindset and the right page. Before you jump into the charting and the technical analysis and building your setups and practicing, I wanted just to make sure that you understand what the ultimate goal is to build this trading plan. So let's go through those goals to make sure that you are crystal clear on exactly what you're doing, why you're doing it, and what you're trying to accomplish. So let's talk about like your first year of trading. So what you should know by the first year of trading is your trade numbers. You should know how to analyze those trade numbers and make improvements and test things out, and then how to implement them. So I want to just go through these things real quickly here with you just to make sure you are crystal clear on what your goal is through this process. And that's really the goal of our qualification process, is to get you to where you have these things. You need your trade numbers. Whenever I meet a trader and I ask them, hey, what are your trade numbers? If they don't know what I'm talking about, I already know, okay, they're still in the phase of they're trying to get to know who they are as a trader and figure out their style. Your trade numbers are very, very important. So let's just take a look at a few of them. These are the ones we're really going to focus on. Your win-loss percentage. Pretty simple. This is literally out of 100 trades, how many did you make money on? How much did you lose? We're going to talk about reward risk ratio. Now, reward risk ratio is theoretical. This is theoretical. When you take a trade, what is your reward risk ratio? Are you looking to make, $2 for every $1 you risk? Are you trying to make $3? This right here is going to determine how aggressive you are as a trader, and you get to set that number wherever you want. Profit factor is your actual reward to risk ratio. So a profit factor, if you have a profit factor of 1, that means on average, for every $1 you lose on a losing trade, you make $1 on a winning trade. So if you had a 60% win-loss ratio and a 1-to-1 profit factor, you're going to be a profitable trader over time. So the profit factor is your actual reward risk ratio when the trades are done. And then max drawdown. We need to know, okay, you trade throughout a whole year. We need to know, okay, this is the worst streak we had because this is what we do a lot of our position sizing work and capital allocation work around. There is constant analysis and updating. For any of you who want to read a great book, there's a book called The Man Who Solved the Market, and it's about a gentleman named James Simons. James Simons started his hedge fund in the 70s. He has averaged 70% a year since then. No one knows who this guy is. He's very, very secretive. He actually closed his fund down, and it's now only his money. And he has a team of mathematicians and programmers, and all they're doing is constantly updating the trading algorithm that he runs. And so that's literally what you're going to be doing. You're always analyzing. So you need to keep track of your trades. When I started out, it was very difficult. I literally had a journal with like pen and paper, and trust me, I hate writing. For like Valentine's Day, I will literally type out a letter to my wife and print it out and put it inside of a card because I just hate writing with the pen. I just detest it. So it was really difficult for me to do, but I did it first because I was willing to do what it took to be successful, and a trading journal is so essential. Nowadays, we have all computerized stuff. When you get into the trading, we're going to introduce a few journals to you that you can use. But really, you just need to have a journal that will give you all of your numbers that you need. And then at that point, it's all about optimization. We are huge fans of A/B testing at Maverick. What A/B testing is when someone asks me the question, okay, Rob, is it better for me to wait one candle after a breakout, or do I get in on the breakout? Like, what's better? And I say, why don't you test it? Why don't you go through a bunch of trades and do A/B testing? A, I get in as soon as it breaks. B, I only get in one candle after it breaks. And then you do 20 trades on those. You look at A versus B, whatever one performed better is theoretically the better system. So everything gets practiced and everything gets tested. And in the end, then you implement the changes. This is a pretty common question we get here at Maverick. What about automation? I am a discretionary trader, mostly because of my age and mostly because I started out in an era where programmable trading was just not all that available to someone on the ground floor, on the retail level. I still do discretionary trading. Yes, I do use alerts. I use a lot of things to kind of help me out, but for the most part, I am what you would call a discretionary trader. Then there's kind of a hybrid where we have traders that use lots of programming, but they still do entry order manually, meaning they're still driving the ship. They're having programs do a lot of the work, a lot of the analysis, a lot of the signaling. But yeah, when it comes right down to it, they're clicking the button. And then there's black box trading. This is where people build programs and they just let them run. And again, they take care of all the order entry, all the entries, the exits. We are not a fan of black box trading. I just told you that story about James Simons for a reason. James Simon didn't write a program once in 1975 and let it run for the next 50 years. That's not how it works. Markets are constantly changing and evolving, and you have to be in there tinkering. There are programs, black box programs you can go and buy on the internet. And you know what? They will probably work for a certain amount of time, and then they're going to fail because they're only programmed in a certain market condition, and things change. Things have so changed in my career that there's no way that anything I did in 1997 would be applicable to today's market. So you just have to keep up with it. So if you have programming experience, use it. Absolutely use it. If you don't, learn it if you want to learn it. If you don't want to learn it, be a discretionary trader along with me, but everything's going to follow that system and path. So again, want to make sure we're all on the same page here. In the end of building your trading system, testing it, perfecting it, you should have your trading numbers. The trade numbers you need to know: win-loss percentage, profit factor, and max drawdown. If someone just tells me these numbers alone, I can help them out. We can work on some things to get the numbers better because that's all I need to know. I need to know what style of trader you are, how often you're right or wrong, and really how much you're shooting for. With these numbers, I can help a trader out get better here. So your job is just to build a system and test. Now, all I mean by system is a systematic way of trading, meaning, okay, I only buy breakouts. I only buy breakouts in the European session. Great. Fantastic. That is your system, and you're going to test that system. And then, of course, once that system is tested, you're going to gather up the data, you're going to analyze it, and you're going to see if you can make it better. Okay, what if I were to wait 15 minutes after the open? Does that give me a better system, better results? And then last, once you test those updates and you make those changes, you're going to implement that. Now, it doesn't stop there. As I said, James Simons didn't stop writing a program in 1975. You're constantly updating and making changes. And based on market volatility and market environment, you're going to make some changes to these systems. But ultimately, in the end, your job is to get a profitable system down to where you can replicate that in the live market. Make sure to join me.